is Horizon's Middle East and Africa, our top stories this morning. Mind games versus the art of the deal. All eyes on Alaska as Russia's Vladimir Putin praises President Trump ahead of their historic summit, dangling the promise of economic cooperation and a new arms treaty. Taking a stake, Bloomberg has learned the Trump administration is in talks with Intel over a possible U.S. government stake in the beleaguered chipmaker. And Israel is planning a settlement project that would cut the West Bank into two parts. Israel's finance minister says the move will bury the idea of a Palestinian state. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi. Happy Friday to you, and potentially a happy Friday if we take a look at where equities are right now, especially after the Thursday that they had, after that hotter than expected PPI print in the U.S. If we take a look at U.S. equity futures right now, bouncing back after some of the session lows that we did see on Thursday, that coming, of course, as we did get that U.S. wholesale inflation accelerating in July by the most in 3 years, surprising a number of investors, especially after that tamer than expected CPI print just a few years ago. But S&P futures marginally up right now. The U.S. 10-year yield at 4.2713 right now. But of course, a lot of the price action that did happen on Thursday did come after that PPI print. Brent crude is also in focus, marginally down right now. It's a little bit unchanged on the week. But many investors, of course, as we mentioned at the top of the show, focused on that meeting between Russian President Vladimir Putin and U.S. President Donald Trump to see potentially how that plays out in the price action of oil. Brent crude trading at about $66.76 a barrel there. And also gold marginally up right now, of course, heading for a weekly loss, though, at about $3,343 an ounce there. And let's just take a look at your terminal chart, though, because, again, after that PPI print, some investors wondering then what does this mean for the trajectory of inflation? And, of course, what does this mean for Fed cut bets here? And as this chart shows us, the odds of a cut now slipping after that PPI print. Now traders paring their bets back, pricing back below one whole cut, as we can see just there. Now, let's check in, though, on how the markets are faring in Asia. We've gotten quite a bit of data over the past few hours. Min Lo is joining us from Hong Kong. Min, what are you watching?
Hey, Jennifer, it's a very, very busy day in Asia on a Friday because we have GDP data out of Japan. We have Hong Kong, Macau set to report GDP data. We have activity data out of China as well. But here you can see the big standout is the Nikkei 225 up by 1.3% thanks to the GDP data coming in at 1%, beating analyst estimates of 0.4%. That's because of solid domestic demand, business investment picking up as well, and showing that resilience despite the tariffs from the U.S., and that's giving people the confidence that maybe the BOJ will go ahead with this gradual path towards a rate hike. Traders currently pricing in a 35% chance of a rate hike in October. So we're seeing the banking sector in Japan really jumping on the back of that. But flip the board, take a look at what we are seeing in China, because it's quite a different picture. And here you can see a split here between onshore and offshore. The Hang Seng is deepening declines after that weak activity data, which missed estimates across every single metric, especially when it comes to retail sales coming in at 3.7%. We flip the board. That's the slowest retail sales number that we have seen this year. Industrial production as well coming in pretty weak here, partly because of the adverse weather in China with heavy floods in different parts of the country that had disrupted factory activity and construction as well. The jobless rate as well ticking up to 5.2% because of graduation season. 12 million new graduates flooding into the job market, and that's weighing on the benchmark index in Hong Kong.
Wow, been quite a busy morning for you, Min Lo in Hong Kong. Thanks so much. We'll check back in with you in just a bit. Let's turn back to our top story, though. Russian President Vladimir Putin is seeking to strengthen his rapport with Donald Trump ahead of their summit in Alaska. Trump, meanwhile, is downplaying Friday's talk, saying a follow-up involving Ukraine's leader will be more important.
We have a meeting with President Putin tomorrow. I think it's going to be a good meeting, but the more important meeting will be the second meeting that we're having. We're going to have a meeting with President Putin, President Zelensky, myself, and maybe we'll bring some of the European leaders along, maybe not.
For more, let's bring in News Desk editor Jill Desis. So, Jill, just a few comments there from the U.S. president. Let's start first, though, with the Russians potentially. What is their expectation, you think, for this meeting?
Well, Jen, I'd say that based on some of Putin's comments, really kind of broadening this out to focus on areas where potentially the U.S. and Russia could cooperate economically, it does seem like Putin is trying to broaden this meeting. So, I mean, and he's also coming into this meeting having projecting, quite a bit of confidence. It does feel like at this point Russia kind of feels like it's winning the war in Ukraine at the moment. But ultimately, I think that focus on, potentially talking to the U.S. president, not just about Ukraine, but also about areas where they could cooperate economically, also potentially pursuing the idea of an arms deal. That's something that Putin was trying to pursue with Trump during his first term in office. They've been trying to, pursue the idea of restarting nuclear talks here, for at least the last few months. This may be an opportunity that Putin ultimately sees to continue those types of conversations. It does seem like, that idea of resetting relations with the U.S. May be really key, might be at the forefront of Putin's mind here as Russia goes into this meeting. And remember, too, I mean, this is, at least going into this seems like quite a bit of a victory for Putin. I mean, he's won a meeting with U.S. President Donald Trump on U.S. soil. This is Putin's first visit to the United States in about a decade. So it does seem like he's got some of that momentum going into this meeting, at least.
And just considering some of those optics, Jill, this could be potentially damaging for Trump. How much risk is it for him? And especially when you think about him returning to the White House, what is the risk here?
Right. Well, Jen, I think, we just heard those comments from Trump himself earlier, kind of managing expectations for this meeting. I think he's put something like a 25% chance of, nothing really resulting from these talks. Yeah, I mean, it does seem like, Trump is obviously trying to reclaim this narrative a bit, but he is, I would say, in the riskier position going into this meeting. I mean, he just had a call, overnight with the European leaders, talking with Zelensky. They're really trying to push Trump not to agree to any kind of territorial concessions or anything like that without Zelensky in the room at this meeting. So it does seem like that's setting up a little bit of a risk here. Trump obviously, goes into this meeting quite frustrated with Vladimir Putin. I mean, bringing an end to Russia's war in Ukraine was really kind of first on Trump's priorities list when he was coming into office. He pledged during his presidential campaign that he did want to bring an end to that war. Obviously, it's dragged on for much longer than Trump has felt comfortable with. So, he is managing those expectations. I believe the White House has said, they're looking to have maybe a second meeting after this involving Zelensky potentially, depending on how these particular talks go. But, Trump has a bit at stake here, obviously has a reputation for being a deal maker, and he, clearly wants to preserve that reputation. But we'll see ultimately how those talks go and what he's able to kind of project narratively coming out of this meeting.
Right. A lot of attention being paid over the next few days. Thanks so much, News Desk editor Jill Desis, for joining us. And Bloomberg will take you to that much-awaited summit between Presidents Trump and Putin. Tune in to our special coverage live from Anchorage, Alaska, and that will be later today. Now, Bloomberg has learned that the Trump administration is in talks with Intel on the U.S. government potentially taking a stake in the company. For more on this scoop, let's bring in our News Desk editor. That's Balazs Pence. Balazs, talk to us about some of the details of this, especially considering the place in which Intel has been over the past few years. What could this mean?
That's right. This is a very important step for Intel. We don't know a lot of the meetings about how the mechanics of the deal would work. We don't know the size of the stake that the U.S. government might take. We don't know how much money Intel would get in this deal. It does seem like any sort of agreement might focus on this chip plant that Intel has been planning in Ohio, just outside of Columbus, which the company has touted as potentially the biggest chip-making facility in the world. But that plan has been facing increasing and numerous delays, and now the company says that may not be up and running until into the 2030s. So that has been a key part of Intel's plan to kind of get back to the level where it once was, to compete with some of the industry leaders. If the U.S. government's involvement can help those plans along, can speed up the construction of this big plant in New Albany, Ohio, that would be a huge bonus for the company.
And Balazs, I don't remember the last time I saw that the U.S. government was potentially taking a stake in a company of this size. What's the precedent here that this could set?
Well, there is some precedent. I think we have to go back to the global financial crisis when the U.S. took some stakes in automakers, which they exited relatively quickly. But we have seen from the Trump administration that they are taking a different approach to the government's partnership with business. We've seen the agreement with other chip makers just very recently, where they will pay 15% of their revenues from chip sales to China. We have seen the government being involved in rare earths. We have seen the government taking a golden share in U.S. steel. So it does look like the Trump administration is pursuing a different kind of economic policy, a different kind of role for the government in the U.S. economy, in strategic industries. And chip making certainly has been at the forefront. And let's not forget, Ohio is very important politically for the Trump administration as well. So they probably see this as a win-win on both sides.
Of course, that's a great point you make there. Balazs Penz, our Bloomberg desk editor, thanks so much for joining us this morning and giving us that update. Now, still ahead, hear why MacroVisor says it's right for markets to expect a Fed cut in September and again in December. This is Bloomberg. Bonds in Australia and New Zealand followed treasuries lower after fresh data on U.S. wholesale prices signaled tariffs are pushing up inflation. Traders dialing back expectations for the Federal Reserve to cut interest rates in September. Joining us is Ayesha Tariq, co-founder at MacroVisor in Abu Dhabi. Ayesha, let's just start with that PPI print, seemingly catching a number of investors off guard. What was your reaction to it? And in the subsequent hours, I wonder where you're at this point.
Good morning, Jennifer. Thank you for having me back. So I wasn't too surprised about the PPI print, and that's because we were actually discussing in our previous, episodes, we discussed that we would see somewhat of a hotter print in July and August. So we're there now, right? Now, I know the CPI didn't really show us much, but CPI tends to be a bit lagged. And PPI is where, at the wholesale level, we're seeing price increases. Now, there's been a study by Goldman Sachs as well who said that the tariffs so far have largely been absorbed by importers and exporters, actually. So they haven't really been passed on to the end user as yet, so the consumer. But that's to come. And so, the PPI kind of signals what is to come in the next few months. And now we actually have even a higher level of tariffs. So that's going to show up in the data progressively.
So then how does the Fed interpret all of this data then? Because as you mentioned, if inflation is to come, what does that mean for September and potentially December?
So, Jennifer, I'm still expecting a 25 basis cut point in September. And the reason I expect that is because uncertainty has come down. If we go back and we listen to everything that, the Fed has said, Chair Powell has discussed, one of the major issues was how the tariffs are going to play out. So there's a little bit more clarity on that front. And that sort of puts the Fed in a place where they can resume their cutting cycle. Let's not forget, they were already on a cutting cycle. They paused for a while because we had all of this uncertainty that came in. And the market is also responding accordingly. So a big part of the market's rally in the last couple of months has not been that tariffs have come down. So the resolution is not necessarily there, but what has happened is there's a shift in the level of uncertainty in the markets. And that's kind of giving a positive sentiment, not just for markets, but I think this will also translate into, the Fed's discussions about a rate cut.
Let's turn to another economy, China, Ayesha, because we were speaking with our colleague Min, who was pointing out a number of data points that we got this morning, potentially that could affect where policymakers go next. How are you interpreting a number of these data points and what it says about the state of the economy?
So China has been on a path, very, very gradual path of fiscal stimulus, right? So it's actually been a little frustrating. I remember coming on the show about 2 years ago and saying we need, stimulus in China. But that really hasn't happened to the extent that we had thought. Now, we also thought that they're holding off to see what happens with, tariffs. And tariffs are still on pause, so there's no resolution with China exactly there just yet. In the meantime, the government has taken steps, but very gradual steps. I think where China is concerned, this is what we should expect. We should expect the government to make gradual changes versus drastic changes. I think we should give up the notion of a bazooka stimulus. What we're seeing right now is some of that weakness coming through because of, as Min Lo said, the environment, but also, in terms of tariffs and the fear of what's next. We've heard some news on the property front as well. That's not going too well. We're still seeing weakness over there. But overall, I think GDP growth is still quite solid. At least according to China's government target. And that sort of offsets all of these smaller data points along the way.
We have to leave it there, but appreciate your insights as always. Ayesha Tariq, co-founder at MacroVisor, joining us there in Abu Dhabi. Thanks so much. Now, Canadians are bracing for summer travel chaos after Air Canada and the union representing its flight attendants reached an impasse over compensation. Canada's flagship carrier has offered a 25% increase in total compensation in the first year and 38% over 4 years. The union says that would represent a salary increase of 17.2% over 4 years and that many flight attendants are falling below the poverty level. Air Canada says it remains available to continue negotiations ahead of the disruption set to begin on Saturday. Now, coming up, we turn to Africa. A toxic spill in Zambia is now believed to be one of the worst world mining disasters. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. A toxic spill in Zambia is now believed to be one of the world's worst mining disasters. An independent evaluation found February's dam collapse at the Chinese-owned Sino-Metals copper mine unleashed 1.5 million tons of poisonous sludge into the environment. For more on this, let's bring in Bloomberg's Andira Oganga, who is joining us now from Kigali. Andira, walk us through what more we know about the scale of this incident.
Good morning, Jen. So what we know is that it's far bigger than what had been anticipated or reported by the government. Initially, the government reported only 50,000 tons had been released into the river, but the report by Zarat reveals that up to 30 times more was released, which puts it at 1.5 million tons. And to put this into context, this is toxic waste that can fill over 400 Olympic-sized swimming pools. And it's not just any form of toxic waste. It contains heavy metals like arsenic, cyanide, and uranium. And all this was released into the river, and now they're terming it as one of the worst mining disasters that have ever been recorded globally. And we saw the U.S. also issue a warning on the scale of this disaster, recall its people who are in the area and the surrounding areas. And we've seen the Finnish and Australian embassy update their health reports that they've put out. We are also seeing Transparency International call out the government and say that this poses severe long-term effects, particularly if immediate measure is not taken. But this doesn't look like the priority of the government. They have severely downplayed the effects of this disaster and overplayed their hand. For a river whose pH is worn, this is as acidic as it gets. It can dissolve human bones. But the government said, we've poured some lime into it. We are neutralizing the acidity, going as far as saying the water is safe. Some government officials have tried to drink it, but this does not negate how big and how deep the scope of this disaster runs.
And it could certainly complicate the relationship Zambia has with China, who's been one of its biggest investors over the past few years, surely.
Absolutely, because SML is a state-owned company and its parent company had pledged to spend at least $1.3 billion to support Zambia's bid to triple their copper production. Hakainde Hichilema wants to increase production from 1 million tons annually up to 3 million tons annually. And this is money that could have gone a long way. And maybe that's why we're seeing the government being very diplomatic, tiptoeing around the issue so that they don't tip some live wires and make this investment go into the back burner. Zambia is also in the process of restructuring their debt with Chinese lenders to a tune of $5.6 billion. And that's something that they also do not want to jeopardize. But there's also something to be said about China's insatiable appetite for minerals, particularly across the African continent. And they're leaving a trail of disasters that is beginning to taint their carefully curated image of worthy partners in these win-win situations. We've seen fatalities in mining sites. We've seen conflict between mining companies and communities. We are now seeing environmental disasters coupled with corruption and fraudulent activities. China needs to go back to the drawing board and rethink how it's going to do business, particularly mining on the African continent.
Bloomberg's Indira Oganga joining us there in Kigali. Indira, always great to have you. Thanks so much. And for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website. You can now also get the latest news from the continent on our weekly podcast, available on Apple, Spotify, and wherever you get your podcasts. And for a deeper dive, catch our TV show, Next Africa, airing on TV on the last Friday of every month. You can still watch our previous episodes in full on your terminal, on the website, and also on YouTube. And here's a few other stories we're watching. According to a new tracker, about a tenth of the targeted measures South Africa requires to tackle economic growth have been fully implemented over the past 18 months. The gauge shows 26 reform deliverables reported as complete out of about 240 that were required. The tracker in part assesses the work done by Operation Vundulela, a unit within the presidency Ramaphosa set up in October of 2020 to fast-track reforms to fire up the economy. Now, coming up, as the world watches for a historic summit between Trump and Putin, we speak with Karen Young. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Mind games versus the art of the deal. All eyes on Alaska as Russia's President Vladimir Putin praises President Trump ahead of their historic summit, dangling the promise of economic cooperation and a new arms treaty. Taking a stake, Bloomberg has learned the Trump administration is in talks with Intel over a possible U.S. government stake in the beleaguered chipmaker. And we hear from the Standard Bank CEO, Sim Tshabalala, after Africa's biggest lender by assets posted record profits and an expansion further into the continent. But for now, it's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi. Plenty to get to in terms of the news and for what markets are paying attention to. But of course, much of the price action on Thursday dominated by that hotter than expected PPI PPI wholesale inflation report from the U.S. We have seen U.S. equities bouncing back from some of the lows that we did see on Thursday. Right now, S&P futures marginally up right now. S&P actually still eking out a gain on Thursday. The U.S. 10-year yield right now at 4.2713. But of course, many investors wondering what that PPI print means for the path of inflation in the U.S. and also for what the Fed will do next at its September meeting. Brent crude also in focus as that meeting between President Trump and Putin comes to a head in Alaska, marginally down right now and unchanged on the week, but trading right now at about $66.75 a barrel. And gold as well, up right now about 0.3%, but still heading for a weekly loss, trading at about $3,346 an ounce there. And of course, let's get back to that PPI print and what it means for the Federal Reserve and the interest rates cuts next. After we did get that print, we did see traders actually pairing their bets that the Fed will cut interest rates next month. Expectations are now back below one whole cut there, as you can see from this chart. But let's check in on how markets in Asia are faring. It's been a busy day over there for Min Min Lo, who's been paying close attention to a lot of the data that we've been getting. Min Min's joining us from Hong Kong. Min Min, what are you watching?
Hey, Jennifer, we are paying special attention to Japan today because of the GDP data out of Japan, beating estimates coming in at 1%. And that's really giving investors hope that maybe the BOJ can finally hike rates in October. So we are seeing the Nikkei extending the gains earlier in the session, now up 1.4%. We are seeing the yen strengthening by 0.4%, now trading at 147.15. The 10-year yields melting up as well. We are seeing particularly the banking stocks in Japan jumping on the back of rate hike expectations. But flip the board, we're taking a look at China. We are seeing this activity data out today, really missing estimates on every single metric. And so the Hang Seng, bottom of your screens, you can see is down by about 1.2%. But interestingly, the property developers are mostly on the up here. The China Developers Index compiled by BI up by 1.7%. And that is despite the home prices data we got out of the government today, showing a continuing declines, down by 0.3%. It's been declining for about 2 years now. But we are reporting based on sources that the government is now mulling, letting state-owned enterprises from the central government help to come in to mop up the excess housing in the market. And perhaps that's why we are seeing the optimism here coming through in the property sector.
Min Min Lo in Hong Kong. Thanks so much, Min Min. Appreciate you giving us that update. Now back to our top story. Russian President Vladimir Putin seeking to strengthen his rapport with Donald Trump ahead of their Friday summit in Alaska. Trump, meanwhile, is downplaying the likely outcomes from the talks, saying a follow-up involving Ukraine's leader will be more important as he seeks an end to the war. Joining us now is Karen Young, senior research scholar at Columbia University's Center on Global Energy Policy. Karen, thanks for joining us. So both leaders likely going into this meeting with different agenda items. How would you assess the two, especially considering some of the comments that we've heard from both?
Well, as you said, President Trump is trying to downplay some of the expectations, saying that he wouldn't negotiate on behalf of the Ukrainians on territory concessions. But clearly he has moved the conversation exactly to that point, to the issue of territory. So that plays into Putin's, key wishes for, what he has wanted to achieve in this war. And so certainly now the agenda is more favorable to what Putin wants. The way that Trump may want to also downplay the sticks of what he could do in terms of putting more pressure on Russia, particularly on secondary sanctions on oil exports from Russia, is something that the president probably doesn't want to actually have to act on. So if he has a way to sort of negotiate out of that or to make it not the topic of conversation, that's probably where he will lead.
If this is not the meeting to pay attention to, if we're not going to see any tangible takeaways here, what are you paying attention to then?
I think what's really coming out of this meeting is that, it's a face-to-face between these two leaders. And Trump probably wanted to, continue their conversation, their dialogue. He plays it as if he wants to sort of read the temperature. Is Putin being more concessionary to him or agreeable in terms of negotiation? But what's really going on in the background is that a whole lot of other states are trying to measure how the United States is dealing with conflict. And the message that's come out in anticipation of this meeting is essentially that might makes right, that occupation of territory is maybe illegal but acceptable. And that sends a very clear message to many, many other states who are, of course, going to be apprehensive and worried about this stance that the U.S. government and President Trump may be taking.
Well, and what could it mean then for potential follow-on meetings with European leaders and Zelensky?
So the next meeting, which, ostensibly would be between Putin and Zelensky, may be hosted by the United States or maybe by Turkey or maybe by the Emirates, would be something towards a ceasefire and probably some negotiation about territorial concessions. And that is not the conversation that President Zelensky has wanted to have. But as I said, I think Trump is moving the agenda in that direction.
And Karen, maybe we have a big take from our team about just the state of the Russian economy over the past few days and how a lot of the price action in the oil sector has affected the Russian economy. Does this meeting play out in the energy sector at all, in your opinion?
Absolutely. Now, we still have the price cap on Russian oil at $60 a barrel. And, oil prices are trading in the mid-60s. So it's not such a penalty anymore. But that revenue is increasingly important to the Russian government to meet its spending obligations. They're dealing with very high inflation rates. And this is just the lifeline. So talk of secondary sanctions, particularly on India, and the amount of Russian exports which have been going to both India and China are of big concern. And that disruption, even though the market is quite well supplied, it would create a surprise and would be very difficult to sort of adjust within a short period of time. And so the talk of tariffs against India in particular, this 50% rate, which would go in effect by August 27th, is tied to the kind of relationship and as a punishment for India's purchases of discounted Russian oil. So Russia needs the price cap to stay where it is and not go lower. The purchasers of Russian oil, Russia and China in particular, need that oil to stay in place. And at least if there is going to be a disruption, to know about it and have a bit of a longer timeline to be able to deal with it.
Karen E. Young, Senior Research Scholar at the Center on Global Energy Policy at Columbia University. Karen, thanks so much for staying up late and bringing us your analysis there. And Bloomberg will take you to that much-awaited summit between Presidents Trump and Putin. Tune in to our special coverage live from Anchorage, Alaska, later today. Now, Israel says it's planning to expand settlements into 3,000 acres of the West Bank, effectively splitting the enclave. The move defies Western calls to recognize Palestinian statehood and targets an area long excluded from settlement plans. Settlement expansion is widely seen as a violation of international law. Joining us now is Bloomberg's Dan Williams in Jerusalem. Dan, how significant is this plan, especially considering a lot of the rhetoric that we've been hearing about any sort of expansion over the past few weeks?
Good morning. The significance is mainly in the timing. We're a month away from the annual UN General Assembly in New York. On the sidelines of that, or perhaps not on the sidelines, it could be a central issue. A number of Western countries are poised to recognize Palestinian statehood. This would buck the convention going back decades. The Palestinian statehood embraced by the international community would have to come about as a result of negotiations with Israel. Those Western countries say they're doing this, or they might do this, in order to pressure Israel to cease fire in the Gaza Strip. There's much consternation about the Palestinian civilian toll in Gaza. So Israel's response yesterday, namely by its far-right finance minister, was to announce building in this wedge area of the West Bank, an area that international that players have been watching for 20 years and effectively prevented Israel or convinced Israel to abstain from building in. So what we have here is a declaration of intent. Indeed, the Israeli minister said this would, quote, bury the idea of a Palestinian state. And the United States, unlike previous administrations, the current administration appears to be on side with this. They're in no rush to condemn this or try to curb Israeli measures. So what we have is a tussle over the idea of Palestinian statehood now being played out on the ground.
Very much there to watch. Bloomberg's Dan Williams in Jerusalem. Dan, thanks so much for joining us and for your reporting. Let's turn to South Africa. The South African government has distanced itself from remarks by the country's top general during a visit to Iran. National Defense Force Chief Rudzani Mapwanya was quoted in local media criticizing Israel and voicing solidarity with the Islamic Republic. Now, it comes as South Africa is trying to negotiate a new trade deal with the U.S. Let's bring in Ntando Tukwana, who is our Bloomberg's economy and government reporter here in Johannesburg. So, Ntando, thanks so much for joining us. Talk about how these comments could potentially affect where South Africa is right now in a lot of its bilateral relations.
Well, Jennifer, I think it's important to first preface this by saying that South Africa and Iran share very divergent political and diplomatic approaches. But Mapanya's comments in Iran when he was visiting do come at a very sensitive time, given already strained relations between the U.S. and South Africa. And South Africa is trying to negotiate for a better trade deal to lower a 30% tariff that the U.S. government has imposed on its goods that it sends to the U.S. And any closeness perceived between South Africa and Iran could actually harden the stance of the U.S. against the South African government and make it harder, to get some relief and lower that tariff that is seen having really adverse impacts on South Africa's economy.
Are we seeing anything in particular from the government about reassuring some international leaders who potentially are looking at these comments and wondering where South Africa stands on their foreign policy agenda?
I mean, the first statements in the immediate aftermath of these comments was the Department of International Relations actually coming out to distance itself first and to also assert that those comments are not the official foreign policy position of the country or of the South African government. In fact, the president's spokesperson yesterday held a press briefing in which he said that obviously the South African government has been escalating efforts to really engage the U.S. government in negotiations that he said are actually is a delicate exercise in trying to reset not only political relations but also trade relations.
Yeah, it's a precarious position South Africa is in. And Ntando Tukwana, Bloomberg's economy and government reporter here in Johannesburg. And Ntando, thank you so much, as always. And sticking in the region, Axios is reporting that the director of Israel's Mossad spy agency visited Qatar on Thursday, meeting the prime minister for talks on a Gaza hostage and ceasefire deal. This marks the highest level talks between Israel and the mediators since negotiations broke down again 3 weeks ago. Now, coming up, Saudi Arabia's sovereign wealth fund cuts the value of major projects by billions of dollars. We'll tell you why next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Saudi Arabia's sovereign wealth fund cut the value of major projects by $8 billion last year, highlighting the challenges as the kingdom diversifies away from oil. The public investment fund valued its giga projects at $64.2 billion at the end of 2024, over 12% lower than the previous year. For more, let's bring in Bloomberg's Abir Abu Omar. Abir, walk us through just where the PIF was at in terms of their performance last year.
Yeah, good morning, Jen. So, you mentioned the first item in the report that is worthy of mentioning, right? That's a 12% lower when it comes to the value of the Giga project, just over $64 billion. Two other items that I think were worthy of noting in this report are the fund's AUM by the end of last year, which increased, as a matter of fact, to $913 billion. That's an increase compared to the year year before. But Jen, it's also worthy to mention here that this figure is by the end of 2024. Right now, we know that the PIF's AUM is in fact probably over $1 trillion. So that falls under the PIF's targets of reaching an AUM of $2.67 trillion by the end of the decade. Now, they've taken up this goal of AUM from $1.87 trillion by 2030. Something else that I think worthy of mentioning here is the annualized return since 2017, which also dropped by the end of 2024 compared to the year before. So overall, we know that the PIF's assets under management have increased by the end of last year. And here we want to mention that mostly they've increased boosted by their domestic spending. You'd remember, Jen, that the Crown Prince and also the PIF's governor said that they're going to focus more on domestic spending in Saudi Arabia instead of international allocations.
So it's a bit of a mixed picture, Abir, but what does this mean? You mentioned 2030 there. What does this mean for Vision 2030 and some of the other projects that the government has undertaken?
Right. So we're talking about NEOM. We're talking about NEOM's constituents here. Look, this is not necessarily a bad picture, right? We've reported a couple of weeks ago that the line, which is a big part of NEOM, the line is this mirror-clad, multiple kilometer city within NEOM, within the desert, that we reported that that project is getting a strategic review. So we know that the PIF had sent consultants, an RFP to ask about the state of the line and whether it's doable in its current form. This is not, again, necessarily a bad thing. We know from people we talk to, economists, analysts, people who look at Saudi Arabia very closely, that rationalizing spending is actually a good thing. And we saw during the second quarter budget in Saudi Arabia, which came out a few days ago, that the central government has reduced its spending, in fact. So they're looking at these projects, they're assessing whether spending as much as, they had envisioned in the beginning makes sense. And so the spending decrease in the Saudi budget has in fact led our Bloomberg economics team to reduce the fiscal break-even oil price to $94 a barrel for this quarter instead of 96 from previously.
Fascinating. Thanks so much for your reporting. Bloomberg's Abir Abu Omar joining us there. Thanks, Abir. Now let's stick in the region. Saudi Arabia's flag carrier is in advanced talks with Elon Musk's SpaceX to install the Starlink internet service. Bloomberg has learned that Saudi is finalizing a deal to roll out the service across its fleet of more than 140 aircraft. A deal would give SpaceX a foothold in the Gulf's biggest economy and represent a significant milestone for Starlink as it pushes further into the global market for in-flight connectivity. Now, coming up, Africa's biggest lender by assets, Standard Bank, posted record profit and flagged an expansion further into the continent. We'll get you my conversation with the CEO next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Nigeria is set to report its July CPI print later today. According to Bloomberg Economics, inflation is seen cooling further to 21.6% year on year. The moderation in consumer prices is seen partly due to a pullback in international oil prices and a firmer naira. Now, Africa's biggest lender by assets, Standard Bank, has posted record profit and flagged an expansion further into the continent. I spoke with the CEO, Tshabalala, who told me he's closely watching global geopolitical developments.
The situation between the U.S. and South Africa is fraught, but we are aware that the authorities are talking to one another. I think the U.S. authorities have been very clear about what they require of the South African authorities. We understand that they are engaged on the different buckets of that conversation: trade issues, geo-economic and geopolitical issues, and of course issues that are peculiar to the South African situation, such as BEE, expropriation without compensation, and so forth. My understanding is that that is in the works. The relevant people are talking to one another. As far as that impacts on the G20, Jennifer, it's in the lap of the gods. We live day by day. We try and do the best we can, given the information we have. I can just tell you that we are very engaged with the members of the B20 in the work task force that I chair, the bank, business and the finance and infrastructure task force. We've got 169 members. They're from throughout the world, including from the United States, and folks are engaged. People from America are participating and making a contribution. We don't know what the American authorities will decide between now and the end of the year, but we hope and pray that there will be convergence, and as we say in South Africa, toenaderang between the relevant authorities. But we hope for the best, and we plan for the worst, but we hope for the best.
And Sim, before we let you go, I have to ask, one decision that was made today or potentially prior to that is the announcement of your retirement in 2027. Can you talk about what you want to accomplish just in the 2 years until that time?
We want to reach a return on equity of between 18 and 22%, and headline earnings per share of within the target range that we've announced. But the ultimate outcome that we want to achieve is that return on equity that is hopefully in the upper range of that range of between 18 and 22%.
Diplomatic answer there by Sim Tshabalala, speaking there with me, the CEO of Standard Bank. And just a reminder, Bloomberg will take you to that much-awaited summit between Presidents Trump and Putin. Tune in to our special coverage live from Anchorage, Alaska, later today. But for now, that's where we leave it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.